Travis Kling is back with us, the CIO at Ikigai Asset Management. Travis, thanks for jumping on Skype with us on a very busy time for crypto again. So last time we spoke, the idea about the thesis here, at least one of them that I know you ascribed to is the Bitcoin gold alternative, the kind of monetary policy hedge. So what's going on? Because it seems like the market says the Fed is a go, but Bitcoin's now dropping off.
Yep. Good to hear from you again, Oliver. Thanks for having me back on. Look, sometimes it's easy to lose sight of the forest through the trees. And right now, I think it's important to take a step back and realize that in the last 7 days, you have the chairman of the Federal Reserve testifying in front of Congress, talking at length about Bitcoin and other cryptocurrencies. You have the president of the United States tweeting that he's, quote, not a fan of Bitcoin and cryptocurrencies and that their value is based on thin air. You have the Treasury Secretary, Steve Mnuchin, giving formal comments, talking at length about cryptocurrencies. And you have Facebook in front of Congress giving multiple hours talking about their new cryptocurrency project. All of that has happened in the last 7 days. So that's just if you told me 2 years ago that was what was going to happen in the last week, I mean, you wouldn't have believed it, right? But that's where we're sitting right now.
And I'm with you, right? The conversation obviously has reached new tiers of people talking about it. That really is, incredible. But as it pertains to the investment thesis, you guys obviously you're an asset manager. We've got an audience of traders and investors, and my question is, can we still tie any price action to any news flow or anything? I mean, if we bring up this chart, I think the gold Bitcoin chart is like a Rorschach test, I've called it, Travis, because you look at the 20-day move, and obviously it's a totally different experience holding Bitcoin versus gold. But at the end of the day, they've actually kind of ended up in the same place after 20 days. So, I mean, what does this mean? Is it really a gold alternative, or was it just a coincidence that the two were moving together?
So it's too early to make a strong call one way or the other. There has been some kind of coincidental or spurious correlation between gold and Bitcoin over the last, call it, couple months. Specifically as it relates to recent BTC price action. Look, the Libra announcement that came from Facebook on June 18th, when you look at the days leading up to and the days after that announcement, you basically took Bitcoin's price from 8,700 in the days leading up to that announcement to peaking at 14,000 before pulling back. And now we're back here right now at 9,600 at the moment. And in my opinion, that's a very healthy, welcomed, rational market response to the risks that are present to the Libra project as it sits right now. The market is looking at what U.S. politicians and the manner in which they're responding to the Libra announcement, and to the extent that Libra is very positive for crypto broadly and Bitcoin specifically, which we believe it is. Well, then if there's risk to that gateway into Bitcoin, then the price is pulled back from that. So that's all been healthy price action to me.
So, Travis, I get that Facebook has launched the concept of a digital form of transaction or payments into a sphere of politicians and Fed that I think, to your point, obviously, is bring it back in focus. But in terms of how it changes the value proposition of Bitcoin, I still have trouble viewing it as this purely bullish thing. I mean, if you've got 2 billion users that will have access to a fairly stable means of digital transaction, does that not hurt the use case for Bitcoin as a means of exchange? I mean, does it not kind of not eliminate, but put Facebook as a serious competitor to at least one possible use case of Bitcoin?
So in the near term, Bitcoin's primary use case is not as a method of exchange.
Right,
it's as a store of value. And the way that I always like to talk about it is, Bitcoin is too good of a store of value right now to be a method of exchange right now. The expected price increase for Bitcoin is just it's too compelling right now that you don't want to spend it, because you end up being like the Bitcoin pizza guy, right? That paid 10,000 BTC for a pizza, and nobody wants to end up being that guy.
Okay.
And so now Libra does provide this sort of, look, it's like Venmo for the world, is like a very simplistic way to think about it. It is a method of exchange. It's backed by a basket of fiat currencies. That's the underlying for the Libra currency. And in the same way that the price of the US dollar has been plummeting against Bitcoin since Bitcoin was launched 10 plus years ago, it's a completely reasonable expectation that the price of Libra is going to also plummet relative to Bitcoin once Libra gets launched.
So here's the thing. Let's talk price, though, Travis, because so much I think in Bitcoin still is about price action. Just like you don't want to be the pizza guy, you also don't want to be, the guy who bought at 20,000 because everybody was talking about it and then lost 85% last year. We've got a rally that I've heard a lot of different explanations for fundamentally this year, but I sort of take an Occam's razor argument as well on the other side and say the rally first started basically in May as VIX dropped to 15 for the first time in 6 months. The rally peaked around a time where the stock market is getting back to the highest valuations since 2018, around the same time Bitcoin was soaring. I mean, at what point, does a duck walk like a duck and, talk like one? Do we say, look, this may be a huge speculative run up again? I mean, is there anything different this time than last year?
Look, Bitcoin is a risk asset. But it's a risk asset with a specific set of investment characteristics that become increasingly more attractive the more irresponsible monetary and fiscal policies become. And again, thinking about the forest through the trees, when you take a step back and look at the incremental developments that have happened with monetary and fiscal policies globally, not just the United States, globally, it is undoubtedly the case that a hedge against that, an insurance policy against that, is more needed today in the middle of July than was needed January 1st of this year.
Okay. Now, where then will you test the thesis, Travis? This is what we talked about last time, and I think it remains really important because I'm with you there. Obviously, there are these ideas that could very well come to fruition that bring this big bull case to reality for Bitcoin. But we do have to have some way to test this hypothesis, right? And I come back to comparing it to gold or comparing it to something. I mean, the market's saying the cuts are a go. The stock market loves it. Jay Powell's like screaming to DC that, look, guys, I'm going to cut. So where does it go from there? I mean, will we need more cuts to see, whether it's irresponsible? How do we quantify whether or not Bitcoin's use in this scenario is as bullish a price event as you're describing?
It's a great question. I think you just have to keep going through time and watching individual kind of global macro events play out, and then just watch how Bitcoin acts leading into and after those events based on how the relative outcomes end up playing out. Like for example, the G20 meeting that was in Tokyo a few weeks ago recently. Bitcoin's price ran into that event, and there was a lot of fear that Trump was going to go to the G20 and that he was going to, blow up the already tenuous relationship with China, or go start some other tariff war with some other country, or that sort of thing. And Bitcoin's price ran into the G20 meeting, and then the actual event played out to be sort of much more calm than was feared. And then you saw Bitcoin pull back away from that. And look, that was just one instance. And so you don't want to say, oh, it acted like this one time, so now it's going to act like that forever, because it's just way too early to say. But you just keep watching events like that and you say, is this thing acting like a safe haven asset? is this Bitcoin is rallying while 2 million people are protesting in the streets in Hong Kong against extradition laws by mainland China. Bitcoin is rallying while that is going on. And you just keep looking at events like that, and you watch how the market is treating BTC in the context of these, kind of very specific confluence of global macro events.
So that being said, when we have this price action that moves the way it does, right, because we have to ask the same questions on the downside as we do the upside. The last thing, Travis, that I'm curious about is we've heard from the crypto bulls that this is an asset that in the past has these big run-ups and big explosions, and then it runs back up. And every time, that next high has been higher than the past. That to me was what I heard a lot in the sell-off last year was, look, nothing to worry about. 80%, this thing happens all the time. It's going to come back. If this was the rally that got to 14,000 and doesn't, what does it tell us? I mean, is it problematic for that case that has been made time and again that each rally comes back bigger than the last one?
Well, one, I'll tell you that it's our base case that 365 days from today, Bitcoin's price will have reached a new all-time high.
Okay.
So that is our base case. You have the block reward happening in May of 2020. You have Backed, that is New York Stock Exchange's Bitcoin futures product that is onboarding their first customers right now. You've got Fidelity that is bringing on new additional customers right now. You have TD Ameritrade that's launching their Bitcoin product sometime this year. So there's a number of positive catalysts. The global macro environment continues to be very supportive. So it's look, could we have a deeper sell-off right now? Yeah, for sure. We've pulled back about 30% from the peak around 14,000. Could that be a 50% pullback and still be within the larger directional uptrend for Bitcoin? Yeah, absolutely. This is all pretty normal course of business for Bitcoin. I understand it is very volatile, but it's kind of foundational to the nature of this asset class.
Yeah. All right. Up still 150% year to date. That trend intact. I'm sure everybody's happy who bought it in 2019. Travis Kling, always a good conversation. Appreciate you joining us. Thanks for jumping on while you're on the move. Travis is a CIO at Ikigai Asset Management.